Hello, everyone. Welcome to the latest Carson's Take 5. It's December. It's a little colder, but you know what hadn't changed? The inflation data continues to improve. Ryan Detrick here. That's what we're going to talk about this week in the latest Carson's Take 5. The inflation backdrop still looks pretty good. So Sonu, well, boy, a lot of people are sick out there. I know his wife's under the weather, his daughter's under the weather. So I'm going to fill in and fly solo here for the next 5 minutes or so. But the inflation data, that's CPI, Consumer Price Index. That's what you hear about all the time. It's a basket of goods and services that everyone pays for things. And yes, it is up. Now, let me make sure I read all these numbers right, because, again, this just came out. Pretty positive overall, though. The headline number is up 2.7% year over year. Month over month was 0.3%. Both those numbers were expected. There's something called core CPI, core inflation, which takes out volatile food and energy prices. That, again, came in as expected, but up 3.3% year over year. Now, what you hear is the Fed is targeting 2% inflation. These are some concepts that Sonu's been talking about a lot. I've been talking a lot about. There's a big reason why today's inflation data was above 2%, and honestly, what we've been seeing for a year and a half almost feels like, has been something called shelter, right? There's rents, there's getting a little geeky on you, owners, equivalent rents, different things the government looks at, and we don't have time to get into it. But the reality is the stuff the government's saying, shelter is running at 5% year over year. With some help from our friends over at Wisdom Tree, looking at real-time rent data and real-time housing prices, that number drops significantly. I want to make sure I read it correctly. I've got it here. According to the Wisdom Tree, it's 1.2%. It's up like a percent year over year. Government's saying, rents are way up here, but the real-time data, looking at places, like Zillow and apartment list month or year over year, rent data has been negative, like for 18 months in a row. Government data is not there. Listen, another time to discuss all that. But again, using real-time data, and if you plug in the real-time shelter, according to our buddies over at Wisdom Tree, that 2.7% year-over-year headline number drops all the way down to 1.5% inflation year over year. And then core, which again was at 3.3, drops to 1.8% year over year. Those are some real positive things. We can slice and dice and look at the numbers. Every month, I saw eggs are up 8%. Every month, little things like that happen. But the reality, again, is inflation was up over 9% year over year back in the summer of 2022. It's come down a lot. It's been a little stubborn lately. But again, when we peel back the onion, as they say, we continue to think inflation is really last year's problem. Now, let's be very clear, because I hear this all the time. The price of goods from 3 years ago, 4 years ago, absolutely are higher by a really wide margin. The honest truth, though, what do we look at? What's the Fed looking at? What's the market look at? It's those month-over-month numbers and those year-over-year numbers. Month-over-month numbers, again, when you look at shelter, keeping this real high level and simple, some big improvement, okay? That's a real small slice, a little data piece, but that's optimistic, all right? And what does it all mean? How much time we have here? Yeah. What does it all mean? Well, if inflation continues to improve is what we expect to see into next year, specifically that shelter data really coming back to earth with the real-time data. If you don't have massive inflation, and we don't think we do, you don't really need to have interest rates up over 5%, right? The Fed has cut a couple times. By the time you listen to this, maybe they've cut, but they're going to cut next week. Looking at something called the Fed Funds Futures, like over a 90% chance of a 25 basis point, that's 0.25% cut next week. Or maybe by the time a lot of you listen to this, actually, it'll be this week, the third week of December there. And we think that's the case. Now, one thing Sona and I have kicked around is, if you remember earlier this year, I don't know if you do or not, but we saw a little bit of a tick up in inflation. Now, some of that was just some reasons that were kind of a little wonky. I don't want to get into all of them now, but there's some seasonal things that can happen. Early in the year, you tend to get pops in inflation. A lot of people started this year thought, oh boy, here we go. Inflation is about to come soaring back. We pushed back against that consistently in the first quarter, said, there's some idiosyncrasy things taking place here that are going to likely unwind, if you will, and not be an issue. And that's clearly what we've seen. So that's out there. We think they cut in December. Do they cut in January? We think they probably should. Maybe they don't. Maybe they're going to pause. So that's okay. That means then you're into, March or so before the next cuts. And we think they should continue to cut a couple more times next year, as we've talked a lot about. I mean, the economy's pretty strong. Labor market's pretty strong. Earnings are good. Consumers, a lot of jobs. People still a lot of jobs out there. Layoffs are very, very low. You start to see layoffs creeping up when the economy's in trouble. Hey, we're not seeing that yet. But hey, you tried to buy a house lately? You have any kids looking to buy a house, grandkids? It is hard with interest rates as high as they are. So we don't think we need to have rates as high as they are, with inflation being last year's problem. So that's the reason to cut. Also, small businesses. Small businesses have had a huge jump in overall confidence after the election. It is what it is, but there's some optimism about next year from small businesses. But listen, the truth again, when interest rates are really high, that's a headwind for small companies in general. I'm sure there's some small business owners out there listening to this. You know what I'm talking about. So if you get lower interest rates, that can help the housing market, can help small businesses. Two things that have, I wouldn't say, housing has struggled. I wouldn't say small businesses have struggled, but they haven't grown like they potentially up to their potential. Let's put it that way. So a lot of different things taking place here. But the bottom line, again, is inflation continues to, I will say, take 2 steps forward, 1 step back. I mean, it's going the right way, right? And maybe be on the lookout for a little bit of a pop early in 2025 in inflation. We wouldn't be overly worried about it as of now. We'll look at the data every time it comes out and let you know what we see there. And again, the Fed is going to cut here by the time a lot of people listen to this, and maybe some more cuts next year. But maybe they pause if we see that pop in inflation. That is a worry of ours again. But we're not worried about inflation. Maybe the Fed will be a little too worried, much like they were this year. But, hey, there's a lot going on there. Reality, last 2 years since this bull market started, October of 22, so over 2 years now, up over 70% for the S&P 500. This is a really strong bull market. When you go back 50 years and you look at other bull markets that got to this point, once they get into their third year like this one did, it's like a cruise ship. Once it gets going, it's kind of hard to stop. And that's what bull markets do. As the shortest bull market, I look at the 5 bull markets last 50 years that got to this point, the shortest made it to at least 5 years. The average was 8 years. Hey, listen, we're not saying there's going to be eight total years of this bull market, meaning there'd be 6 more. I don't think anyone's going to complain if that's the case, but we'll worry about that when we get there. I think it's just important to remember the economy is solid. Inflation's pretty not a big hindrance. The Fed continues to be dovish. I mean, we don't see any hikes next year, so you can say the Fed is dovish. That's a tailwind. This bull market's being led by strong earnings. Consumers are still growing. Consumers are still spending. The labor market is still growing fairly nicely. Had a big tick higher in monthly jobs just last month after a really poor number in October, specifically because of the 2 terrible hurricanes I went through and a couple big strikes. So I've said probably more than enough in the latest Carson's Take 5 talking about inflation and why it still looks pretty darn good to us. Everybody enjoy the holidays. End of the year's here. The bull market's still here, so there's a lot to be thankful for. And we'll be back next week. I believe Sonu should be back next week, hopefully, to talk about whatever's out there. We'll probably talk about the Fed actually next week, I would assume. But nonetheless, we'll be back next week. See you then. Thank you.